Jennifer Obinaya earns about 1.8 million naira, roughly 1,200 US dollars annually, working in an accounting firm. Until January the 1st, 2026, she paid no personal income tax. Under the new policy, income above 800,000 naira, that's about 533 US dollars, is taxed at 15% after rent relief and other deductions. She says the change is already worrying as food, transport, and housing costs continue to climb.
Is way too much compared to what I earn. So if the government can consider low-income earners like me and reduce it to like 2%, that would be good.
For years, Nigeria's tax system leaned heavily on pay-as-you-earn deductions from salaried workers. Authorities say weak income tracking meant lower-level employees carried most of the burden, while many wealthy professionals and informal earners stayed outside the tax net. Officials estimate that as much as 96% of collections once came from junior workers. The result? A system widely viewed as legal but deeply unequal.
When it comes to tax collection, many Nigerians are outside the tax net, and that's why government keeps saying that we want to broaden the tax net so that people can be paying appropriate taxes. High-income earners are not very difficult to tax. It's a general problem with the tax authority not being able to capture, individuals are supposed to be paying taxes in Nigeria.
Now government says the balance is beginning to shift. Under the reformed tax framework, earners below 2.2 million naira yearly are exempt. Rates rise gradually for higher brackets, reaching up to 25% for top earners. Rent relief, health insurance deductions, and other allowances remain in place. Officials say the aim is to push the burden upwards while widening the tax base. Here in Nigeria's capital, officials insist these reforms mark a turning point, moving taxation away from junior workers and towards higher income earners. Tax authorities are now rolling out new compliance drives and data sharing systems to capture professionals, business owners, and informal earners long missing from the records. Whether that effort succeeds could determine if these changes deliver the fairness the government is promising.
So if you look at the current tax system, it is actually designed to favor the lower income earners, while it's going to take away significantly much from the rich. And of course, for me, taking 25% from somebody earning 50 million a year is still a child's play. And that is why we have advocated over the years for wealth tax, net wealth tax, where the super rich will be considered on the basis of their net wealth and not on the basis of PIT.
Nigeria's tax to GDP ratio stands at about 12%, well below the global benchmark of 18%. Authorities say fixing personal income tax inequality is key to funding public services and erasing pressure on poorer households. For workers like Jennifer Obinaya, the reforms promise relief only if enforcement reaches higher earners. The test now is whether fairness on paper becomes fairness in practice. Kelechi Amekalam, CGTN Abuja, Nigeria.